I took this trade on a stop and buy limit. I'm training myself to do that now, and I'm targeting this buy side liquidity. I know there is an order block here, but I could take profits here, but I don't want to. So just gonna hold it like this. Now, what is today? Today is a buy day, and on a buy day, we expect this candle to close lower, right? So we expect some selling to put in a sell side of a market maker buy model. So this candle right here, when it was trading up here above this price point, we are going to be looking for the last stage of accumulation, which was here. Prior to this high being run, this is the last fair value gap. So once we broke lower below the fair value gap right there, this right here was a good level to be a seller because we've already taken the buy side liquidity. So sell in here, put a stop loss above here. Price drops. Key institutional reference points are this one. This right here was the breaker that was used to send these prices higher. Now, now that we've gotten a reversal, we expect a retracement to the breaker right there. It becomes an inversion level. Also, if we want, we can use this order block that was normally a bullish order block. So on this side of the curve, it becomes an inversion uh, order block. So right here, we draw the line like this. So when price trades up to it, right here during the opening range, we can sell short, targeting these overnight lows. And also, if we're targeting that, we can target one minus 1.5 of this range right here. So this price leg is the one that we use for measurement, and we were expecting it to get to the key level, but it did not get to the key level, and then it broke down. So as it broke down, we sell short here. First target is here during this candle's time. Then after that, we can target, we wait for this candle to close, and we have a bearish order block here. We measure 50% of that order block. We can enter another short position right there, targeting this minus 5 below these lows, and also digging into this order block right here. So that's what we got here, and we got a reversal. The first hour after the reversal, we don't trade. The next hour, when price retraces down to this level here, this candle's high is a key support level. So it can be a buyer there. So buy here and hold, and if we miss the buy here, this is another opportunity for us to be a buyer right there. So we are targeting this high, but we do know that we just made it back to 930 open right here. So there can be a retracement in the marketplace, and that retracement right here, this candle is an up candle, we can get a down candle here, and then turn resume going higher. So this is 930. 925 was the entry, the return to the fair value gap right here. That was the return. The purpose of uh, this live stream is to desensitize myself from trading results. Like here, I see there is uh, there's a profit of $1,000. So let me see if I can turn it into handles instead of money, so that it doesn't get to my mind. Executions, text. So I wanted to show me in text. Uh, so I'm risking 76 ticks to make 380 ticks. Um, okay, but how about this? This part should also change. Um, Profit and loss. Okay, so I'm already up 219 ticks using, I think this is second stage accumulation. So this is the low risk buy right here inside of the order block. And once price breaks above this high, we can buy again, targeting this high up here. So risking 76 ticks to make 200 ticks. Not bad. So I want to see this candle expand more higher to give room for the next 15-minute candle to run to the buy side liquidity. Again, I use this up close candle. This candle is close, and this candle is down here close to define the range that I can use to project below and above price. And here I was interested in seeing where we were going to stop on the downside, and my projections gave me this level. So that's why I was watching. And after getting this signature here, this wick that is at 20, almost 50% of the next wick. So that is a good reversal pattern for me. So you have to look at these things. This is a reversal pattern right here. We will that's the reversal. Right? And over here, this is another reversal pattern. like it. No, no, no. Don't do that to me. Okay. 240 ticks. I think that is reasonable. Two, three, six. So we don't actually need price to get up to this level for us to take profit. So we can take our profit above this high, this 930 high. We can get out there to see if price wants to continue. They can continue, but we enter on a limit and we exit on a stop. Or so, how much money is it? $1,200. Now I want to see 1,300. Bingo. So entry on a limit order, exit on a stop order. That's my new day opening range. Ooh, poof. High is gone. This is beautiful. So now I'll take a screenshot. Okay, so this in this video you saw me execute live, and I took my profits here because I didn't want to hold to the high, even though I knew that that was the draw liquidity. I knew that uh, there was this high and this high here. So this high is relatively higher than this one. So normally um, that is a high resistance high. So it's usually high and harder for price to get back here. But if you look left, there is this other high, which is lower than that high. So because of this high here and this other high here, this one doesn't matter. So these are relative equal highs. That's why we get this strong price move over there. Now, uh, Today, as I said, today is a buy day, and on a buy day, I expect price to drop during the opening range, during the first 30 minutes of trading. First 30 minutes to an hour of trading, I want to see price go down and give me a reversal. So the first 30 minutes from 9:30 to 10, price was going down, and then from 10 to 10:30, right here, that is another 30 minutes of trading. So that is the first hour of trading. We got to our liquidity pools, and then price reversed. After 10:30, any retracement down here, we will be looking to be a buy. So normally, um, the safest entries, the best entries on a buy day will occur after 10:30, because if we assume that this is going up, this right here, it becomes what? This is a breaker, because that's a high, a low, lower low, higher high. So this is a potential breaker that we can use. And as you can see here, after 10:30, there was a swing low that formed here. We came down and accumulated that one inside of this up close candle. So this up close candle is important. Always watch for scenarios like this. If you are going to get a reversal at 10 a.m., you will get this kind of scenario. If you're not going to get a reversal at 10 a.m., before 10 a.m., price will be retracing back to premium inside of this range. If this were a sell day, but it is a buy day, so this is the scenario that formed. So right here, we see clearly that where other people saw a mess, we saw order. And also look here, this is the opening range of today, the new day opening range, not the opening range gap, or also not the new day opening gap. It is the new day opening range as recently taught by ICT. See here, after price moved away from the low risk buy here instead of this order block. So price came coming back inside it, rally away, breaking the swing high, traces back inside of this. We are a buyer right here. We do not see this as a bearish order block, expecting prices to break lower, because this order block would be in discount considering this high and this low. So this is not a bearish order block. Now, price will be going off of the new day opening range right there, rally. We do not chase this. I used to chase this price move going up, but I know that I don't need to chase it anymore, because I know if we break above this high, this will become a mitigation block. So on the next candle coming down, I can be a buyer. This one came down to institutional order flow entry deal. I saw that, but I did not enter for the reason that when this candle was coming down, I did not have a swing high yet. So if there is no swing high, I cannot be a buyer. So I didn't buy it, but after it moved away, I placed my buy limit right here. So when price came back again, totally sweeping this low, I was generously filled, and then we could see what ensued, right? So that's pretty good. This is a very good uh, price action. It's fantastic. A textbook Um, I love this. I really love seeing this. And I am recording my analysis, and I'm also recording this live so that I can hold myself accountable. I can uh, watch again some other time and see where I made mistakes and how I can correct my mistakes. And since I'm recording this live, I will also not be going to other people's YouTube channels and see what their analysis is. Because sometimes when I check that, they end up influencing me and they influence my analysis, and I really do not like that. So this is how I trade, and this I'm training myself to become the best trader I can be. Right here, there was another setup to sell short during the open at 9:30 when we opened right here, and price tried to go back up here. We could sell it short because this is a fair value gap. So typically on a buy day, this is the kind of price action we want to see uh, in the pre-market session. We want to see price initially rallying higher above this opening price. If we get an inversion M5 fair value gap, we would want to sell there short. And we stay on M5. We don't have to look at any other time frame. If we are going to get a setup, it will form on M5. If we are not going to get a setup, then it doesn't form, and we don't trade, right? I will not trade if my setup is not on M5. I don't need to look at the M1. At least for now, I want to just stick to this time frame until I can trade profitably. Then maybe if I want, I can look at other time frames. Right now, this is what I am uh, equipped. This is what I've trained myself to look at, and I want to stick with this. 5 minute chart is my chart. It is going to make trading pay for me. So going forward, I will record this live, trying to understand uh, how all the institutional reference points that I studied from ICT, how they play out in the marketplace. What happens when the market trades, when price is delivered to those levels. I'm more very, very curious right now, and I'm trying to understand. So, as I'm ready to follow ICT's advice, he says, stick to it, pick one time frame, stick to that time frame until you're profitable, until you know what you're doing, until you're comfortable with your model. Then you can go down to other time frames and you know what you will be looking for on that time, on those time frames. I don't like to trade the 1 minute time frame because sometimes there are too many flavor gaps, and also moves just too fast for me. I don't think that fast. I like the 5 minute chart. This candle, each candle takes 5 minutes to form. This is good for me, like this speed. Right here, we, after running this uh, sell side liquidity, or get close to the sell side liquidity here, price will trace the back up inside of this range. So if you don't know, you would probably consider this, oh, this is a CB, right? So this CB maybe is going to fill, it's not going to fill, we don't do that. But if you look left, right here, this order block was supposed to be a bullish order block. But when price came to it during the opening range, it broke through it like knife cutting through butter. So this level becomes an inversion level. When price makes this low here, returns to it, we can be a seller there. So you can sell here. Let me show. I can sell this uh, inversion fair value gap. It is called uh, my tip off FVG. That's the one that tips me off. That it's like, okay, this trend going up is dead. Now we're going to start seeking sell side. So that's where we get our first entry. See how this candle came back to it again and just broke lower. See that? Beautiful. This is fantastic. Now it broke lower. After breaking lower, where can we sell short again? Well, right here. This candle's open. Price returns to it. That is our inversion order block. We can sell short there, targeting the swing low and eventually this standard deviation right here. So usually when you get a measured move of this range, you should take your profits and just set this up because this one when it opened here, it could have continued higher, but before retracing back, there's just too much um, volatility that will be involved in this price move. A lot of manipulation can come into play because there is going to be a reversal. So why can we short here as this candle is going up? Isn't this an order block? No, no, no. We do not consider it an order block because we have not yet run liquidity. I like order blocks that sit inside of liquidity pools. So, and also there was no reversal. This is not a reversal pattern. When there is a reversal, the lows form in a certain way. If there is a high that is going to stay during a given day, you will see it. If there is, for instance, these candles right here, that was a strong pattern for me because these wicks, there's something about these wicks that indicated that price was going lower. And there's something about these other wicks here that indicate that the market was reversing and going up. So when this candle closed up here through the order block, normally you should stop looking for short prices because this is a reversal pattern. And the same thing goes here. After this candle closed up there, after running this sell side liquidity, this is another liquidity, the reversal pattern right there. I'm not going to say what it is. I I will encourage you to go study ICT and see what this is. And this also is another reversal pattern taught by ICT. So when I see this, I know that the market is much, much more likely to break higher. And this move up, I don't chase it. I wait for a retracement into this mitigation block. Hit it right there. That is where I am a buyer. Perfect entry. If I miss this inside of the new day opening range, if I miss this, come buy here, get above this high here, I took my profit, but I knew it was coming here and eventually here. But now, as it stands, it could be going much higher. Take this day's high and potentially this one right there. So that's what I'm watching now. When price gets there, I will close the stream. So here is another pattern. Immediate rebalance of this wick. It shows that we're trying to get somewhere. Again, I only sell short after I see a fair value gap broken through like this. Then I will sell short here. Ideally, I would have wanted to see a swing low form, like if price broke below this low, form the swing low and return to it. That is the best uh, entry. But this is also okay. Right here, especially when you have a mitigation block like this. This, you want to see a swing high form before returning to it. Otherwise, be careful. Like here, uh, this order block, this fair value gap, you can buy institutional order flow entry draw. It's different from here. This one requires a swing high formation. This here, it may not need to do that. There are two different things. If we get a swing high here, I would expect price to return to discount. But since it is too close to the liquidity pool, I don't want to do that. So just get institutional order flow entry drill right there, or consequent encroachment, or whatever. Blah, 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 blah. And then sell side liquidity is right here. Buy side liquidity, not sell side. Come on. So that's where I think we are headed. As soon as we get there, I would like to close the stream. So 21,780. So this move here becomes another market maker model that is unfolding. This accumulation level, and this is another accumulation, and we get close to terminus. So if we get a reversal from there, sell back down into this range, okay? Something like that. The new day opening range is usually traded too during the equities open, like the opening range, during the actual opening range. So if we open here and the new day opening range is here, what is the bias? Short. So from here to here, we're short. And also, um, we're expecting higher prices today. So we want to see what form the sell side of the market maker buy model. This level of accumulation, this is the safest level to trade. All of this tricky, but if we wait for this, it happens. Buy here, sell there, or take something off inside of this inversion fair value gap and collapse the whole position here, or take, depending on the number of contracts that I have, take another contract off here and exit everything, or hold the last one for this level. As you can see, we came so close to this and then playing around. So let's see. And on a buy day, we want to see price go down first before going up. This down move can give us opportunities to buy. From this side, there are certain things that we use on this side of the chart to go long. I am not teaching. If you want to figure out what this is, go to ICT's channel and look for the market maker buy and sell models. You can figure out this whole setup in this fractal. Well, let's see this candle's open. Its close is 21,650.50. What is the low of this candle here? 21,649.75. So about 75 ticks off. That's pretty good. So if we use the close of this candle to buy on this side of the chart, we'll have fewer than 75 ticks. This thing here is taking too much time. I'm going to close the stream. I was hoping for a push higher to the buy side liquidity, but it looks like we may come back to gather more steam before going back to it. So